Our first speaker is an expert in swing trading growth and momentum stocks. He's been actively trading the market since 2002. You can find him at morpheustrading.com. Please welcome Rick Pedicelli.
Thanks again, Dave. So, all right, what we're going to show you today is a setup that we call the blast off at Morpheus Trading Group. It's a pretty simple setup to identify in that it smacks you in the face with the price and volume action. You really can't miss it on a chart, and it's pretty simple to locate. A little tougher to trade, but it is something that is very good for those with smaller accounts, as most setups are in the $2 to $10 range, and you can take advantage of the short-term strength. So what we're basically looking for in the blast-off setup is, as you can see here, the volume looks pretty strong, 14 million shares to 3 million. All of a sudden there's a big spike due to any kind of news, and this was a gap up, I believe. For whatever reason, the spike in volume and the move up, it's usually a 40, 50, 60% move or more over a few weeks, or in this case 1 week. And volume is just tremendous. It's huge. It's bigger than any volume it's ever seen. That's the signal to begin with, and that's when the buy opportunity comes in. And let me bring in here a quick little. Here's a few rules. So the best candidates are in the $2 to $10 range with an average trading volume of 100,000 shares per day. Looking for an explosive move, 30 to 60% or more. Keys, it's been going for quite some time, sideways for quite some time, and the volume should be pretty obvious. It's got to be huge. And volume action has settled down. And once it settles down, it usually will do so around a 50-day moving average or a 10-week moving average on the weekly chart. And you just want to look for, or we look for a dry up in volatility for tight price action, and that's where we start looking for the specific entry point. Once we have, remove this. If you weren't able to jot that all down, don't worry. We're recording this, and I believe, as they said, the recording will be made available next week. So, once we have the pullback on the weekly chart after a few weeks, and there's a drop in volatility, that's when we want to go to the daily chart. So this is the gap up here, which was from earnings, I believe. And so for ACAD, this was a little bit different than most in that it was so strong it actually set a higher low, after the first pullback, which doesn't always happen. It's usually a little bit weaker than that, but it's the first pullback, and then the second one is a higher low, which is a great sign. Typically, we're looking for entries over a downtrend line break or just a tight range. And that will coincide with the 10-day MA. Tight range is the price action going sideways right here by the 10-day MA right there, so you have a 7% stop. Keep in mind that these are $2 to $10 stocks, so 10 to 15% stops aren't bad because you're probably going to get a 40% or more move out of these things, so that gives you at least a 3-to-1 reward to risk ratio. So anyways, as you see, there's a dry up. Let me bring this up. Dry up in volume. Volume goes from huge to well below the 50-day moving average here. And that's when it's time to take advantage of the price action. And, as I mentioned, you get in over a tight range. Stops can be set real tight right here if you're watching all the time, or if you want to be a little bit more, you want to give it a little bit more wiggle room, you can go ahead and place another potential entry point. Stops still pretty tight or loose down here. And once volume confirms, you'll see volume jump here above average. That's when most likely the trade's ready to move out. Of course, there's going to be false breakouts, and I have a few examples of these trades, so they're going to go pretty quickly. But so what you're looking for is typically a 1 to 2 week move, about at least 3 times what you've risked. So if it's 8% risk, you're looking for 25-30% minimum price target. So from the original entry point say around here, if you're looking at the test of the prior highs, it's 35% versus maybe a 7% stop. So plenty of reward in there. So pull back, light volume, and then another move out. Whether or not you take profits there is up to you and your style of trading. It definitely gave you enough to justify taking profits, and that it was a 35% move. There's no reason to sell, though, the full position. So what I do, depending on the situation and the market, is take full profits off the table if it looks like it's too much too soon. If it looks like it's a little bit slower of an approach, you can take half the position off, leave half on. The remaining half you leave on could have a stop such as the 10-day MA, which is right here, as long as the price action holds above the 10 MA. As you can see, it's also something where you can continue to monitor for additional entry points down the road. We have tight action here. Continues to go sideways. More entry points wherever you see tight action, and eventually another move out. So this is basically what the setup is. It's an explosion in price and volume, and then a dry up in price and volume. So it's basically the same thing over and over again. We're not looking specifically for a stock that's been in a strong uptrend. We prefer to see something coming off the lows, as a matter of fact. Here we have a blast off. If you look in, this is TKMR, Techmira, again a weekly chart with the 10-week moving average. So here's the monster. This is less than 100,000 shares at this point. I'm just showing you that there was the first blast off, a pullback to the 10-week MA, and then a move up. Another monster volume spike, followed by about 40 weeks, almost a year of sideways price action, and then yet again another blast off setup emerges after a year long, almost a year's worth of sideways consolidation. Move out to all-time new highs, which isn't typical of most blast-offs, but when volume is monstrous like it is here, it really forces us to pay attention. At this point, we're looking for a dry up in volatility. There's an undercut of the 10-week MA here, and that could be due to the volume was pretty strong, and there's some profit taking. There was quite a move up, so I believe that move up. See, that move was 100%. So anytime a stock moves 100%, you can expect some selling, even if it is headed higher within the next few months. So there was some heavy selling here, and that may have contributed to taking the price action below the 10-week moving average. Well, there's no drop in volatility here or volume, and right around the 11/22, the week of 11/22, there's a drop. So this is what we are looking at, and this is something we traded in the newsletter as well, the Wagner Daily. We felt that the drop in volatility was pretty obvious right here, so we went ahead and purchased Techmira over around 8:15 on 11/29, and there's two, as I mentioned before. You can go with the tight stop or the loose stop. And we went with the loose stop in the newsletter just to give clients some wiggle room. And we looked out there because it was a false breakout. Like I said, though, you can't be discouraged with this setup. You really have to continue to monitor it because the volume was so tremendous on the move out. Pulls back in, never stops us out, but continues to head higher. And so even if you did not place an entry here, your eyes are on the setup still. Here's a nice break of the downtrend line on a pickup in volume and a close above the 50-day move. Here's another move which is still above on a test of the downtrend line. I call this the test of the backside of the downtrend line. There's more sideways action on no volume here, dried up, complete dry up in volume. Then we have a move out again. So again, another tight range, this time with a move through the 10 and 50-day moving averages. And so you have a big move up over 4 days. It's a 60% move. In the newsletter, I decided to take profits the next day on the open because that's the only way to do it. We don't have intraday sell recommendations. It's all done the night before. So that was I believe, a 50% move. Like I mentioned in the last setup in ACAD, if you want to go ahead and take profits on half the position or trail a stop for half the position beneath the prior day's low, you get stopped out here, still have half a position waiting for the 10-day MA to do its thing. If the 10-day MA holds up on the first test, like it did here, kind of bounce off the lows, you just set your stop beneath 10 and then go to work, let it do its thing. As soon as there's a violation, you can exit, or if there's a price that you want to get out at, that's good enough for you, that's when you get out. I mean, you don't want to get too deep into finding the exact high and trying to get out, because calling a top is going to be impossible with these type of moves. They're very fast and very explosive, and for the most part, you want to be in and out, taking money off the table on the move kind of correction, and because as quickly as they go up, they can come down. So as you can see, the great potential in some, especially when you have just volume continue to be above average on the move up and quiet on the move down. Our last example here is a slightly different one in that we have a failed, sort of not really a failure, but they're back-to-back, which we don't see all the time. But so we have Candy Technologies. As you can see here, when you go to find these setups, and I do my scanning in TC2000, or you can find them in TradeStation as well, volume, once again, is going to smack you in the face. This shouldn't be something where you go, well, is this enough volume? Clearly, that's enough volume. And there's no volume like that ever. That's exactly what we're looking for. So these type of setups, you're not looking for volume just to come in just above 6 million, 8 million. You want to see it double, triple, or more the highest volume it's ever had, or at least the past few years, right? So with Candy, there's a bit deeper of a correction. Usually these corrections are around the 30 to 40%. Candy, I believe, was around 50 at its deepest, a little bit over 50. So again, once there's the pullback, we then go to the daily chart and we look for the dry up and volatility. And you could, again, doesn't have to be fancy. Break a downtrend line. Here's your entry. Over the downtrend line and the prior day's high, there's some volume on this day. You can have a stop that's pretty tight right there. Goes up and it stalls out and fails. So you're stopped out here. Is the trade over? No. Anyone who's been trading for a while knows you're going to get stopped out of a position. You may have to re-enter. That's fine as long as the setup is still intact. You can say the setup's still intact. Certainly there's nothing that's happened here. You have a big reversal candle here. Anyways, the price action gets tight around here again. And there you have sort of what happened with I believe the TKMR trade, in that you have a break of the downtrend line, the price action gets tight above the downtrend line, and then there's the move through the 50-day MA and the 10 MA and the sideways action on volume, which starts the move out. And again, you have a test of the prior highs here. It's like an 80% move, so selling into strength. Is it the first day it moves out? Probably not. Is it the third or fourth, fifth day after the stock's made a 100% move in 14 bars? Yes. Could this gone up another 50, 60, 70%? Maybe. But we're here to take. I think most people would be happy with a 70, 80% move over 2 weeks. So again, then this was the back-to-back. So another spike in volume, I believe, on the weekly chart right here. So we're still looking at the setup, but you don't want to give up on these setups. You get your downtrend line break, very tight price action in here. I mean, this is really nice price action just below the 50 MA. And what's good about these type of entries is that yeah, you don't know if they're going to follow through to the upside, but given the price and volume action on the move up and on the pullback, you're anticipating the follow through. And with these type of entries, you can have stops beneath the first higher swing low or the lows of the base. You know, at 20% it becomes a bit too much for a stop. I would just likely go with an entry around here. Your stop's about 10% away, which is more realistic. 20%, you start needing to get to the 50% returns to have a 2-to-1. So anyways, there's the pullback and the move out. Taking profits to the upside, maybe raising stops beneath after a 2-bar low. You might get stopped out up for half here and let the rest go. And there's the 10-day MA doing its thing again. You might want to be all out here, and that's fine. I mean, the stock's gone from 6 to, that's a 100% move in 2 to 3 weeks. So again, these are not stocks that you want to be sitting in on the pullback because you're going to give up a chunk of those profits. However, these are stocks to monitor in the future for potential pullback trades. You know, you can continue to monitor these stocks. They have great price and volume actions, so you know, they're swing trades. You know, certainly you don't have to stop following them once they make their move. Now, want to be clear about one thing. Do not go ahead and look for these setups when market conditions have broken down. As they are right now, you're going to go looking for a blast off, and you might find a few candidates that have had a monster move up in a short period of time, but they're going to pull back, and they're probably not going to find much support while market conditions are bad. So you got to be careful. There's got to be some sort of uptrend in the market. As usual with most setups, you're not going to want to go after a bullish pattern when the market's having a hard time finding traction. So, but this pattern, when the market's in decent shape, is something to that you can really use to. What I like to do is, most of my trading is in IBD type stocks that I'm holding for several weeks to several months. What these type of trades do is give me a way to make money on the side if I have money available and I'm not fully margined out. You know, I can take a few of these trades and make some money on the side while I'm waiting for the longer term trades to play out. So let me see if I've missed anything here. Again, you want to focus on the weekly chart and not worry about the daily until the pullback's in place. And also, many times people ignore the weekly for the entry point when we're back on the daily here. There's a lot of chop on a daily chart. These are tight ranges to me, but maybe not everyone sees the same thing. When you sit on the you're on the weekly chart, you see a reversal candle here undercutting a certain moving average. You look at the width of the reversal candle, 15%. That might be a shakeout that holds. You see the tight price action on the weekly here. That's an entry point you're looking at potentially. Yes, they could fail, but you're just looking for tight price action with reasonable. I don't recommend buying at the highs or near the highs. We're not looking for cup and handle patterns here. We're not looking for the price action to stall beneath, just below the highs and form some sort of handle. You know, you want to catch it as close as you can to the break of a downtrend line with the 10-week moving average just below, or the 10-day moving average starting to come up and catch the price action. Don't necessarily want to mess with the action when the 10 MA is going lower, because usually the stock is going to bounce into that and then go sideways. You want to catch it when it's starting to trend up, if possible. So that's pretty much the blast off setup. Any questions?
Hey Rick, what were your rules for entry on that?
All right, the rules for entry are pretty much the same. For nothing more or less. Looking for a higher swing low, sideways action, and then a break of that range. There's a few entries here. You're just looking for tight entries. low risk entry points. That's how I define them. When I first started trading, I was all, crazy about exact entry points. But what I found is over the years is that look for tight action and look for a reasonable stop, and there's your entry. Candy, entry points, break of the downtrend line. Does it work? No, it fails. Tight sideways action here next to the 50-day MA with the 10 MA coming up. There's another entry point right in there. Over a prior day's high, 10% here, or you can go, I wouldn't recommend 20% stops, but still potential because there still is potential because it's pretty explosive moves, and you're dealing with stocks that are under $10. So again, break of a downtrend line, 50 MA around here. Move can be over a prior day's high if it's a tight 2-day range, or over the weekly high, and your stop's pretty close. Again, 10-15% is fine. And so that's what we generally look for. There's no, if you can find a reversal candle, that's great, but there's no specific entry. And if, like I said, if it's harder for you to identify the entry point on a daily, well, then you want to look on the weekly and just and look for an inside week. There's a tip off. Here's an inside week right here, getting above the high of the inside week. A reversal candle, a bit of a reversal here on the weekly. See if I can blow that up to show you guys a bit better. So there's an entry point over a week's high, stop beneath the week's low, or if it's not too far away, 13%, you can put out a swing low here. So that's basically how it works. So there is no set entry point, but you're always looking for a break of a downtrend line with potentially a higher low. Like this may have been another shakeout point here. This could have been an entry. There's a higher low here with a move above a 3 or 4 day high, potentially higher low. It doesn't work out and it undercuts, but like I said, you're going to get stopped out. Sometimes you got to continue to follow the pattern and look for another logical low risk entry point. Just don't get in because you think it's going to go higher. Here's a reversal candle. It's perfectly acceptable to place entry points above a wide range reversal candle, not a small reversal candle. Make sure it's statistically significant, and you'll be able to locate a pretty decent entry there. Look for the low risk entry points, and those are basically sideways price action. I have a question here. It says, do you find the bid-ask spread an issue in some of these stocks? Possibly, but you're also not looking. These are trades that shouldn't take up 20% of your account. Maybe 10%, 5 to 10% tops. If you have a 50K account, you're looking at a $5,000 position. You're not looking to get several thousands of shares. If that is the case, and you are, then you got to make sure there's about 1 million shares or higher traded. So for some of them, there might be liquidity could be slight issue. If we're talking about a stock that trades $3 and has 200,000 shares a day, that could be a bit of an issue. But for something that's trading 1 million shares a day, unless you're trying to buy 40 to 50,000 shares, you shouldn't have an issue buying 5,000, 6,000 shares. And plus, hopefully some of these entry points are a little bit under the radar as well. We're not really looking for cup and handles or consolidations that are closer to the prior highs. We're really looking to do our work off the lows of the base. Trying to get in a little bit lower than most. All right, so.
All right, Rick, do you have a product you want to plug here? I put a link in here to your swing trading service. Everyone can get that in the chat. So free trial to your swing trading service that you do with Darren Wagner.
Yeah, we have the risk-free blog. The risk-free newsletter, which it's 30. I didn't give you the link to the blog, but it's morpheustrading.com/blog/. A lot of information here about how we trade. blast off setup should be in there. There's also a stock screener we have, which has a relative strength scan that I don't think something along the lines of IBD. What they do with the relative strength rankings, we have a similar type of ranking over a 6 to 12 month period. So, if you're just new to trading and want to learn how to swing trade momentum and grow stocks, it's a pretty good site, and the blog can. There's a lot of learning to be done on the blog for those who are new to trading.
poised.trading.com, and again, there's a free trial to his swing trading letter. Thanks a lot for joining us today, Rick.
No problem. Thank you, Dave.